Okay, so what you're saying, people, and welcome back to your favorite YouTube channel. So today, guys, I do have a video for you about how to draw your key levels. I'll be breaking down AUD CAD, showing you how I would draw my key levels and how I would go about trading it, as well as some tips in there. So hope you guys do enjoy the video, but with all that said, let's get straight into it. Okay guys, so welcome to the chart. So on my screen I've got AUD CAD here on the daily time frame, and like I said, I'm just going to talk you through how I will draw my key levels on this market. So to draw a key level, I'm mainly looking at two things for my criteria. Number one, I'm looking for multiple tests, at least two, and the second thing I'm looking for is good, meaningful moves from those areas. So not necessarily the price or the level where price has reacted to the most and keeps revisiting. I want to be looking for some good moves from these levels and at least two rejections. That's really what I'm looking for. So for AUD CAD, if I just zoom out a little bit, and a good tip actually to draw your key levels is actually switching to the line tool to draw your key levels, because it can help you focus a bit more on the points where price actually reverses, because the wicks give us a good area of rejection where, you know, anywhere within that wick is a rejection really. It's because, you know, price couldn't close within that area. So wicks are good, but when you're drawing your key levels, we're going to be focusing on that closed price, because from that specific point here is where the market couldn't push higher and reverse. So that is our meaningful area. So switching to the line tool can help a lot. And like I said, I'm just looking for areas where prices had some meaningful moves and at least two rejections. So firstly, I could see this area here is a nice area to look at. Reason being, two rejections and two big meaningful moves. And then you can see we've actually had some nice moves as well from that same area. Actually some really nice moves from that area there in the past as well. So again, I'm also using a zone, a rectangle tool on TradingView to draw my levels, because a key level is not necessarily one specific price. The market's not necessarily perfect. It's going to fluctuate in and around that level. So for me, this area here is definitely a key level. Another key level that is pointing out to me is this area here. You can see some nice meaningful moves from that level there. Big move all the way back down to these lows. So I already know there's a lot of impact from that level, and also some nice moves here as well, acting as support, then resistance. So again, multiple tests, more than two, but multiple tests and a good reaction. Second one, or third one actually, this level here, if I just draw that a little bit better, this level here, you can see big meaningful move from that level. Again, second test, nice move, and again another third test there, which we're having right now, really nice move from that same area. So what I can see here is that the market is showing me some good moves from these levels and also multiple rejection, which is a great confluence. So I think that's all I will have for this AUD CAD chart, because a big tip or big rule to have when you're drawing key levels is not to draw too many, because if you draw too many levels, then you're going to be very stagnant with your price. You know, as soon as price rejects one level, it's almost going to come to the next one. So you can't really plan nice swings and nice moves from your levels, because you just got so much on there. It's too cluttered. With these levels here, I've got a good room to work with. So if I just measure that, it's about 180 pips there, and that's probably about maybe 150. Yeah, 150 pips there to the upside. So there's room to work within these levels. When I do drop to lower time frames, the daily, if I drop to the hourly, I can catch some nice moves and some nice trades, and it's not too cluttered. I know essentially if the market does reject this price, I'll be looking for a move to the downside back into this level. If the market does break through this, I'll be looking for a push back down to lows. If we break through, I'll be looking for a push up to roughly around that level, and if rejected, come back down, so on and so forth. So there's good moves, and I can plan my trades from that. Typically, you don't want to have more than 2 or 3 key levels on your chart at one time. Any more than that, a little bit too cluttered, and yeah, it's difficult to really plan some nice moves from those levels. And another thing you want to look for is also the kind of average move that we've had from those levels. That's a very powerful concept to look at when planning the move from the levels. So for example, you can see this level here, when it was used as support, you got to move to this price up here, and then when it was also used as support, let me just change the color of these arrows so it makes it a little bit better, make it thicker as well. So let me make that red. So from these arrows here, as you can see, when we had reactions from these levels, the market had pretty big moves. We got a move into this price, then we didn't quite make it again. So we're seeing moves to roughly around that area there, which tells me that if the market does break through this level again and we use it as support, there's a good chance that the market will make it up to this level here, because previously we did see moves past that level. So there's a good chance the market will make it back up into this area here. Likewise with this resistance here, as you can see, when we held it at resistance, big moves to the downside into that level there, and even bigger move down there. So if we hold this level as resistance, there's a good chance that we probably will see a move back down into that support. And then if we break through that support, most likely we'll see a move back down to those lows, just going off previous data and previous price action. And if we do hold this resistance here, you can see huge move to the downside through that level into there. So there's a good probability, again, if we can hold that level, we could probably see a move back down to this level. And if you break through that, we can probably stretch it even down into that level there as well. So by mapping out the previous moves, we know where potentially price can go if we can break or hold these levels. And this gives us a lot of significant information, because now there's a lot of meaningful, we can map out a lot of meaningful moves from these levels. So for example, coming into this level here as resistance, let me go back to the candlesticks, coming back into this level here as resistance, drop to the hourly time frame, I know that if I do see some nice rejection here and some signs of reversal, there's a good chance the market can make it back into this support, and the risk reward there could be very, very good. Is that same with the break and retest? If I can get above that, I can take advantage of a move into that level. So not only are we waiting to see if the market's going to reject or break through, we know exactly where, not exactly, but a high probability chance of where the market will go once we do break through these levels or hold on to these levels. And lastly, the thing I want to talk to you guys about with these key levels is also trading from them. Now, when we're drawing key levels, you typically want to draw it in the higher time frames and then scale down and then take advantage of those moves on the lower time frames. You can trade on that same time frame if you wanted to, but if you want to maximize your risk reward, you preferably want to be dropping down to the lower time frames. Me, I typically draw my key levels on the daily or the weekly, and then I move down to the 4H and the hourly to trade those levels. So, for example, we draw this our levels here on the daily time frame. Now, to trade this, we don't necessarily want to be the first person into the trade, and as soon as price gets there, look to short the market. You see something on the hourly time frame or even the 50-minute time frame, you don't necessarily have to jump right in and be the first person into the market. You can do, but you don't necessarily want to be, looking for a bigger move, because if you're the first person into this level here, you're basically trading the reaction from that level. So price may come into this level, retrace back down to here, and that's you're out the trade. You trade the reaction from the level. If you want to trade the swings from this level, which is what I'm trying to talk to you guys about, trading the swings and the moves from these levels, you want to wait for price to develop in these areas. And we monitor that by structure. So as price moves up into these levels here, push there, pull back, push there, pull back, we want to see price give us signs of reversal. So some lower highs and some lower lows. And when we see that, then we can jump into some shorts and take advantage of that. And again, we don't necessarily have to take a trade exactly from the level. It can be slightly below here. Say the market pulled back, formed some structure around here. So we came back to retest this level, because we know where the market potentially may go. We can take trades based on these minor levels on hourly or whatever time frame we're trading, and still take advantage of the move, because we know that the fact that we are rejecting this level here means that we do have a good probability of making a move all the way back down to there. So again, we can take safer, more conservative entries and take trades where probability is in our favor, and don't leave ourselves too exposed where the market could fluctuate and break through these levels very, very easily. And we could easily see a big wick on the daily time frame above this level, a big wick pushing like so, and by the end of the day the market pulls back. On the lower time frame, that will look like a breakout, and a lot of people will be buying as price push through the levels. But we have to wait for daily candle closures to tell us if we're getting a breakout or not. If you do see a strong candle closure above on the daily, we know that potentially a breakout. So then we can look for our buys on the following candle, the following day. If the market just gave us a big wick to the upside, we know that we haven't broken through, and the following day we can look for our sells to take this further to the downside. So it's important to monitor the candles that you've drawn the level on. So for instance, this is the daily time frame. If I am seeing wick rejection on the daily, I know that I'm not, and the hourly, I'll be looking for my sells. If I'm seeing a strong close above the following day on the hourly or whatever time frame you're looking at, we'll be looking for our buys to take it to the next level. So with the key levels, the main things you want to be looking at is making sure you can map out potential areas where the market can go depending if we break or hold the levels. Number two, you want to be making sure you're monitoring the candlesticks on the time frame you draw the key levels to see how price is reacting with it. Number three, when you are taking your trades, you want to be monitoring structure, looking for signs of reversal, then getting your trades and taking advantage of that. And number three, also make sure there's a good amount of space. Number four, sorry, make sure there's a good amount of space between your levels so you can actually trade from them and off them. Because if it's too many levels, it's going to be too cluttered, and it's going to be difficult to get some meaningful trades. So yeah, make sure you have some space between your levels so give yourself some room to trade with. But yeah guys, if you have enjoyed this video, please be sure to leave a like, subscribe, share, hit the bell, all that good stuff. Make sure you do become part of the channel, part of the family, so you don't miss out on any videos in the future, and obviously the live streams in the week there as well. But yeah, if you have found the video useful, please be sure to leave a like. Have any questions, or didn't understand something, let me know, and leave a comment down below and we will get to it. Make sure I'll respond. But yeah guys, hopefully you found the video useful, and take care, have a great day, and I'll catch you all on the next one.